Hi, this is Rowland for Money and Markets TV. Last week's dismal employment report was only the latest evidence of slowing economic growth. And with the possibility of a double dip recession looming, many experts now think the Federal Reserve will respond with a third round of quantitative easing. If that happens, inflation is the likely result. So today, I want to discuss how to protect yourself from rising inflation and focus specifically on one popular vehicle, Treasury Inflation Protected Securities, or TIPS. But first, let's review exactly why inflation is so dangerous. In essence, it's a loss in the purchasing power of your money. For example, let's say you see a nice pair of shoes for $100. With a 5% inflation rate, those same shoes would cost $105 a year later. But really, the shoes cost the same as before. It's just that each of your dollars is worth 5 cents less. So in other words, inflation encourages you to spend your money now and punishes saving. This is why bond investors are particularly vulnerable to inflation. When you buy bonds, you're a lender. Even if your interest income actually goes up in nominal terms, your investment is still losing ground. And that's where TIPS come in handy. Unlike regular T-bills or T-bonds, TIPS have built-in inflation adjustment. In theory, this keeps TIPS holders from losing purchasing power while they own the bonds. However, this inflation adjustment isn't free. You must be willing to accept a lower initial yield while waiting for a boost from inflation. Keep in mind, TIPS aren't for everyone. They're targeted at conservative and income-oriented investors. If you're more of an aggressive investor, gold or other commodities may be a better way to capitalize on very high inflation. But if you're interested in TIPS, there are several ways to invest in them. You can buy individual issues, although these tend to be costly and impractical in small amounts. So I believe low-cost ETFs are a better option. They give you diversified exposures to many different maturities, and you can easily adjust your investment when needed. There are several ETFs that invest exclusively in TIPS issued by the U.S. Treasury. But there are also ETFs that include TIPS from other countries, including one issued by State Street's Spider family of funds and two iShares ETFs. Now, I'm not saying that TIPS are a foolproof answer to inflation. They can be a valuable component of a retirement income strategy, but they shouldn't be the whole strategy. I recommend you plan ahead and include TIPS as one of your investment possibilities. I'm Ron Rowland for Money and Markets TV. Thank you for watching.